Good evening and thank you for joining us on India Business Hour. I'm Parikshit Luthra and here are the headlines we are tracking at this hour. After slowing for 2 months, inflation accelerates in January to 6.5%, well above street expectations. Food prices are the main culprit. Cereal prices have risen 16% compared to last year. All 10 Adani Group stocks end in the red as the sell-off continues. Adani Group pledges additional shares worth more than 1,000 crore rupees to SBI. The bank says this is a top-up for the Carmichael project in Australia as companies are required to maintain 140% collateral coverage. Supreme Court hears the Adani case, asks the government and SEBI if a proper framework is in place to protect retail investors and suggests setting up an expert panel. Government says it is open to an expert panel but wants suggestions to be tabled in a sealed envelope only for the eyes of judges. Global auto majors Renault and Nissan plan to invest 5,300 crores in India to develop electric vehicles and SUVs, promise to create 2,000 jobs and want to establish a full supply chain for EVs in India to gain a competitive cost advantage. Supreme Court directs SpiceJet to encash bank guarantee and pay 270 crore rupees to former promoter Kalanithi Maran within 2 weeks. SpiceJet's lawyer asked for the interest rate to be lowered and says Marans are free to reverse the transaction and take the airline back. Vistara CEO Vinod Kannan says merger with Aero India on track for on-time completion. Adds Vistara will operate as an independent airline and will treat Aero India's competition until the merger is complete. Prime Minister Modi inaugurates Aero India 2023, India's largest aviation show. Over 800 companies from 98 countries in attendance. More than 250 MOUs worth 75,000 crore rupees are expected to be inked at the 5-day event. 1 week after a series of earthquakes, rescuers pull out a woman alive from the rubble of a collapsed building in Turkey. The death toll crosses 34,000. Vital aid to Syria is being held up due to disputes between government and rebel groups. More than 5 million people are estimated to be homeless in Syria. US military shoots down another unidentified object flying at high altitudes. This is the 4th flying object shot down by the United States in a week. Officials are yet to reveal more information. With a 3.4 crore rupee bid from RCB, Smriti Mandhana gets top billing at the inaugural player auction of the Women's Premier League. Deepti Sharma, Jemima Rodriguez, Shefali Verma, Harmanpreet Kaur and several foreign players receive bids of more than 1 crore rupees. And time to take a look at the day's trading action. A range-bound session saw Dalal Street end the day lower. Nifty and Sensex ended close to 0.5% lower. IT and financials remained the biggest drag for the market. Mid-caps underperformed the benchmarks. That index fell 1.5% as weak earnings led to a steep fall in certain stocks. The rupee depreciated 17 paise to end at 82.7 against the US dollar. A strong American currency and muted trends in domestic equities weighed on the sentiment. Oil prices softening ahead of crucial inflation data from the US tomorrow, which could force the Fed to pursue a more aggressive monetary tightening policy. This, traders feel, could impact demand for oil. Moreover, resumption of Azerbaijan oil exports from Turkey's Ceyhan terminal eased some supply chain concerns. The big headline of the day: inflation has accelerated in January to 6.5% after cooling for 2 months. This is well above street expectations of 6.1%. Food and cereal inflation are the main culprits. Lata Venkatesh is here with more on the inflation fine print.
Yes, that's right. This 6.52% is a complete shocker. Even the widest range of our, poll responses came nowhere above 6.2%. So this is a complete shocker for us and for the guests whom we spoke with. What is even worse than the 6.52 headline number is the reason for that rise. The reason is food inflation. Food inflation, which came in at 4.19% last month, this month is up 5.92%. So the full 1 percentage point higher. The within food inflation, What is most ubiquitously consumed, cereals, is the biggest culprit. Cereals are up 2.6% month on month and 16.2% year on year. That is perhaps what both economists and the central bank were not prepared for. Other items, protein items like pulses and even more meat and fish, egg and milk are other products that are up between 8 and 9%, leading to a very strong rise in food inflation. Core inflation, which is largely services, personal services, transport services, recreation services, that lot is also up 6.1% like it was in December, but that's largely on expected lines. What is unexpected is that the Reserve Bank will have to move now very strongly. When the Reserve Bank hiked rates on Feb 8th, the expectation was that they did not guide whether they will rise or whether they will hike again or not hike, because they just wanted to wait and see. But now a large part of the market will expect that the Reserve Bank has to hike rates when they announce the policy in April.
RBI must have, had some kind of a clue about today's data print, and that's why you see the undertone of the last policy review was very hawkish. And I personally feel they retained that flexibility because they must have sensed this. We cannot be very optimistic about RBI's future actions, and that's why they have retained that flexibility, and nobody can rule out that there could be another rate hike also.
Clearly, the negative shock has come entirely from food. The other items are by and large in line with what we were expecting. Now, in terms of the average for the quarter, we anyways expected Q4 to be very flattish as compared to Q3. So we were puzzled why the RBI, the MPC had reduced their calculation for the current quarter. A lot of the seasonal factors that take the food index down or the food inflation down would ease out from February onwards. So we cannot expect there to be too much of a benefit from lower vegetable prices, for example, going forward.
All right, the other big story we are tracking, all 10 Adani Group companies, including NDTV, ended in the red today as the rout continues. Group stocks lost over 51,000 crore rupees in market cap just today, taking the total loss since the Hindenburg report to more than 10 lakh crore rupees. The group has lost 64% from their peak valuation and 53% since the Hindenburg report. The group has pledged additional shares worth more than 1,000 crore rupees to SBI for the Carmichael project in Australia. Shares that amount to 1% stake in Adani Ports, 0.5% stake in Adani Transmissions and 1% stake in Adani Green have been pledged additionally. SBI said Adani Group's pledge was used to only top up the collateral and no new loans will be sanctioned. Meanwhile, Congress leader Manish Tiwari asked the Finance Ministry about the exposure of public sector banks, insurance companies and other public sector institutions to the Adani Group. The Finance Ministry responded saying New India Insurance, United Insurance, National Insurance, Oriental Insurance and General Insurance have exposure to the Adani Group, which amounts to 0.14% of their total assets under management. However, the government statement added that financial institutions like Exim Bank, SIDBI, NHB and NABARD could not divulge information under their act. And Vivek Iyer is here with all the key developments and the movement in the Adani Group stocks. Vivek, over to you.
Well, some important developments that took place and which impacted the stock prices of the Adani Group stocks. First on our list, the ASM frameworks, the three of the Adani Group stocks were put into Adani Ports, Ambuja Cements, as well as Adani Enterprises. Two of the stocks were removed out of the ASM framework, meaning that less margin upfront requirement would be required to go ahead and trade in these particular names. Also, some important action coming in as far as rating agency Moody's is concerned. While Moody's retained its rating across all of the Adani Group stocks, for 4 of the companies where they have rating, they cut the outlook from a stable to a slightly negative outlook. So Adani Green Energy, Adani Transmission, Adani Electricity were 3 of the names where you actually saw the outlook being reduced by Moody's. Now also some important development in terms of pledging activity. What actually happened is that there were additional shares that were pledged by the Adani Group, and this was done in favor of the SBI Cap trustee. Adani Ports, the pledge has now gone up from 0.65% to 1%. Adani Transmission as well as Adani Green too saw their pledges going higher. So we had, SBI management come on our channel where they actually said that there has been no new fresh loan being given. Rather, this is a top-up requirement for the Carmichael project where, SBI had actually given a loan as far as the Adani Group is concerned. And in fact, when you're talking about the SBI chairman, we have the management with us where they've clearly stated, the amount of exposure as well as, right now, how is it that they're looking at this particular exposure that they have to the Adani Group.
We have an exposure of US dollar 300 million facility that was granted for the Adani Group's Carmichael facility in Australia, of which they have drawn down USD 180 million towards the railroad part of the project, while the mines they have so far managed to complete with their own resources. So there is one of the covenants for this facility is that they should maintain 140% collateral coverage. In addition to the project assets, they are required to maintain this collateral coverage by way of pledge of shares from the three companies belonging to the group. This is not any loans that was granted against pledge of shares. No additional finance was granted against this additional pledge. These are essentially to maintain a covenant that is pre-existing in terms of an earlier facility, which is completely covered both by project assets as well as this collateral coverage.
And Supreme Court heard the Adani case and asked the government and SEBI if a proper framework is in place to protect retail investors and suggested setting up of an expert panel. Ashwit Kumar joins us now with the details.
Well, just for the context to begin with, it's on Friday that there was the first hearing in this case, and that's when the Supreme Court had served up three issues before the Solicitor General. The first was about the sufficiency and the competency of the current framework for investor protection. The Supreme Court had said that middle class has massive exposure to the stock markets, that lakhs of wealth has been eroded, and therefore had sought questions from Solicitor General on sufficiency of the current framework for investor protection. The second was on whether or not additional legislative or regulatory tools can be used for strengthening this framework. That was the second issue. The third was, what about an expert panel? This was a suggestion that fell from the Apex Court that perhaps an expert panel may be needed to advise, to recommend any additions or changes to the framework in place. Now, these questions were answered in brief by the Solicitor General today before the Apex Court. First up, the Solicitor General, appearing on behalf of the government, he said that the current framework is in fact competent to deal with such scenarios, such shocks, that there are enough secure safeguards in place. That was first. The second, Solicitor General said that at this point, while this current system was sufficient, it was open to the idea that was suggested by the Apex Court for suggesting for having an expert panel. That was the second key takeaway. The third is that, importantly, Solicitor General warned and perhaps expressed concern on behalf of the government that, look, if an expert panel is deliberating on the issue, it could send potentially adverse situation signals to global investors, and that may be a cause of concern. And towards that end, what has fallen from the Solicitor General is that the scope and the remit of this expert committee should be limited, and that the government should be the one suggesting names of experts to this panel, and towards that end has said that it will submit both of them in a sealed envelope only for the eyes of the judges. So no call has been taken on that yet. The matter will be taken up for further hearing on Friday. That's when the Supreme Court will resume hearing.
Meanwhile, market regulator SEBI, in an affidavit to the Supreme Court, highlighted that the current framework in place for investor protection is robust, validated not just in recent weeks, but also through pandemic. SEBI said that it would undertake detailed examination as per existing regulatory framework. Moving on, Renault and Nissan are set to invest 5,300 crore rupees to develop 4 special utility vehicles and 2 electric vehicles for the India market. The alliance, through fresh R&D investments, aims to create 2,000 new jobs. The company's global CEO, Ashwani Gupta, tells CNBC-TV18 that Renault Nissan would like to establish a full supply chain for electric vehicles in India to gain a competitive cost advantage.
This new chapter in India will be based on our last 15 years of experience, but also the growth potential of India becoming the 3rd largest market. Hence, we decided to invest $600 million or 5,300 crores of rupees in 6 brand new products, out of which 4 brand new products will be C-segment SUVs for Renault and Nissan, and 2 A-segment battery electric. In addition to that, we will create additional 2,000 employment, not only to do the development in India for India, but also doing the software development and the digital development out of India for our whole worldwide operations.
And Vistara CEO Vinod Kannan has said that the merger with Air India is on track for on-time completion. Speaking to CNBC-TV18, Kannan said that structure, organization, processes and knowledge sharing has already happened. But until the merger is complete, Vistara is treating Air India as competition. He also said that Vistara will have 70 planes in its fleet by end of 2024.
The process has started. There are various authorities to whom we have to apply. As you might know, there's competition, of course, Competition Commission of India. There are competition authorities around the world, which we are also looking at. There's also the NCLT, which is another, a body which we have to get approvals for. So all those work streams have actually commenced, and they are in various stages. Of course, we can't talk about anything that is sensitive commercially because we don't have competition or antitrust approvals. Therefore, we can't talk to Air India on those bases. But in terms of structure, in terms of organization, in terms of processes, and some knowledge sharing, I think that has already happened in terms of SOPs and best practices. As far as the timelines are concerned, I'm still hopeful that this will happen. In fact, we hope that it can be expedited because it's always good to have closure to this as soon as we can, and we'll try to do that.
And staying with the aviation sector, the Supreme Court has given SpiceJet 2 weeks to encash a bank guarantee and pay Kalaniti Maran 270 crore rupees and interest worth 75 crores for an arbitral award. SpiceJet's lawyer asked for the interest rate to be lowered and said the Marans are free to reverse the transaction and take the airline back. India's defence might was on full display on day 1 of the Aero India 2023, touted to be Asia's biggest aviation show. Prime Minister Modi inaugurated the 5-day event in Bengaluru. More than 800 companies from 98 countries would be participating. MOUs worth 75,000 crore rupees are expected to be inked. Ritu Singh captures all the action from Aero India and the government's Make in India pitch.
Ladies and gentlemen, stages rolling.
हमारा लक्ष्य है कि 2024-25 तक हम एक्सपोर्ट के इस आंकड़े को $1.5 बिलियन से बढ़ाकर $5 बिलियन तक ले जाएंगे.
Well, Prime Minister Modi today inaugurated the 14th edition of the Aero India here in Bengaluru, hoping to garner investments of more than 75,000 crores. Several global players present here at the exhibition. We spoke to many of them. Boeing, for instance, said it will look to expand its presence in India and set up a logistics warehouse. It expects significant demand to come from in India and wants to garner a large chunk of that. Swedish Major Saab also said it is bullish on India's defense market and said while it had mutually called off the MOU with Adani Group, it would not say no to a potential future partnership, although it did not comment further on this matter. France-based Thales also said it will expand its footprint here and double down on hiring as it completes 70 years in India.
$1 billion or 8,000 crores every year, that is the exports or the sourcing we do from India each year, right? Yes. Of which 2/3 is manufacturing. Yes. In terms of investments, there's an additional $200 million campus that we're doing right here in Bengaluru. Okay. And then this logistics center, we don't have an exact number, but it'll be in the 200 crore realm of investment.
While you've said that you decided to part ways with the Adani Group mutually, but in future, if an opportunity does arise, would you look at partnering with them again, or have you severed ties for good?
I don't say no to anyone when it comes to that. It's depending on the situation. In certain cases, company A is better than company B, and company C could be better than company D, and so forth. So at this door, we are not closing any doors for future partnerships.
We see great potential to develop our presence in India and to not only address the Indian market, which is obviously very attractive, but also address the global market from India. So our engineering centers in Noida and Bangalore currently represent 1,400 engineers, and we plan to double this number by 2026.
More than 800 companies are going to be participating in this 5-day-long exhibition. About 100 of them are foreign companies and more than 700 are actually Indian companies, which includes some of the MSMEs and startups that will be showcasing their niche technology, the growth in the aerospace and defense capability that they've achieved in the last few years. The theme this time around for the event is Runway to a Billion Opportunities, and with the government's Make in India push, Indian companies also see huge potential for growth.
We already have surprisingly very large export orders for our artillery guns. And 5 years ago, if anybody asked me would I ever be exporting artillery guns to Europe, I would have said no. Okay, because I never thought that this could be possible.
And time for a short break, but coming up, with a 3.4 crore rupee bid from RCB, Smriti Mandhana gets top billing at the inaugural player auction of the Women's Premier League. Details when we are back. Welcome back. You're watching India Business Hour. The first ever Women's Premier League auction witnessed an intense bidding war. Over 400 players went under the hammer, out of which 246 were Indians. Indian ace batter Smriti Mandhana received the top bid of 3.4 crore from Royal Challengers Bangalore. Network 18's Srinivas Rao is here with the report.
So what we saw today at 2:30 p.m. It was the start of a new chapter in women's cricket. The auction is rather being held in Mumbai at the Jio World Centre, and five franchisees that just walked into this ecosystem, sat down, wrote the checks for the big names that have been picked up. Smriti Mandhana, the biggest name, has gone to Royal Challengers Bangalore. Harmanpreet Kaur, another big India cricketer, has gone to Mumbai Indians. And what happened in IPL 15 years ago, when franchisees first came in and invested in big players, Indians and overseas, is the same narrative that we are looking at 15 years later, where once again the start of Women's Premier League has happened with big bets being taken on well-known cricketers from India and abroad.
Right. Thank you very much, Srinivas, for joining us. Moving on, diversity and inclusion has been a key priority area for ITC. Hand in hand with scaling up its various businesses, the FMCG to hotels conglomerate has also been scaling up women's participation to the extent that 5 of the company's 11 FMCG plants are either manned and operated 100% by women or have women in majority on the workforce. As part of our ongoing campaign, Future Female Forward, a women's collective, CNBC-TV18's Shilpa Rani Peta reports that while this transformation has not been without challenges, the company is not looking at slowing down on increasing women participation in its operations.
From not being allowed to work in a factory to building a house for her handicapped father, 29-year-old Vanilla Periyasamy has come a long way. An operator at one of ITC's largest FMCG plants in Tamil Nadu's city of Trichy, Vanilla says being financially independent has helped her not only fulfill her dreams but those of her family as well.
My father is handicapped. He used to sell snacks on a cart. My father wished to have a house for 30 years, but no one granted us a loan because he's handicapped. After I became an operator, I got a loan of 12 lakh rupees basis my salary. We built a 2 BHK with that money. My younger sister could also finish her degree using this money.
Vanilla is just one of the many stories at this ITC Foods plant, which employs 2,700 workers, 77% of them women. Their assignments are varied, from security to factory operators to HR. And it's not an accident. This greater participation of women across functions is a direct result of ITC's larger conglomerate-wide efforts to induct more women into its workforce.
That's a very important focus area for the company, and we have taken a series of steps to improve not just representation, but also engagement as well as involvement of women across the workforce. We have particularly focused on campus recruitment, where, for example, over 44% of our management recruits today are women employees. In many of our businesses like hotels, approximately 60% of new entrants at management are women employees.
But this initiative has come with its own set of challenges.
Take, for instance, this factory here in Trichy, which earlier faced challenges in hiring women because of resistance from families to allow them to work. And then women having to juggle both work and going back home and doing household chores, and a reluctance for night shift also resulted in high attrition rates earlier.
ITC says tackling such problems went beyond just putting women-friendly policies in place.
We go out to hold road shows where we engage with parents, with family members. We invite them to come to the factories and spend some time, go through, see the infrastructure, allay their concerns, questions, queries. I think typically they range around what's it like to work, is it safe? Having seen the real picture, I think a lot of them then convert and agree.
Women workers at the factory say working in an environment where women are numerically dominant gives them a sense of community and has helped bring more and more women into the workforce.
We can speak to the HR about our problems, and so I really like working here. Safety is also important here.
We don't have any fear of returning to work after delivery and maternity leave. If other companies also ensure this like ITC, women can return to work without worrying about their career getting affected.
The company also runs a women's economic empowerment program that extends beyond offering microcredit, skilling and promoting cooperatives and self-help groups. Its special focus is on uplifting and enriching ultra-poor women. The goal? Make women financially independent and strengthen their position as decision makers in their families. In Trichy, with camera person Milind Bagmare, Shilpa Ranipeta.
And with that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC-TV18.